Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for Wednesday, Hump Day, March 7th, 2018. So we are likely looking at, well, a bumpy ride this morning, to be quite frank. Unfortunately, we are in a hypersensitive market, and that hypersensitive market, when that occurs, the market will tend to take almost anything and overreact to it. Now, yesterday I was encouraged because we had a hold of this area right here. We were building this wedge, and yesterday's price action calmed down a little bit. And here on the diamonds, it's actually even better on the SPY. We'll look at that in just a second. But here on the diamonds, the bulls actually kind of held that big day move, that 400-point move. We held it. And I was encouraged at the end of the day that at least the range of the day had started to calm just a little bit. We were still, significantly away. We're still about 400 points from the 50-day moving average test here on the diamonds. But I was encouraged that we held that day. We didn't just whip right back down and wipe out Tuesday's big move. So what happened? Well, we get a resignation from one of the chief financial advisors at the White House, and after the close, and the market gets a huge reaction. Now, it kind of feels like, and I'm sure there's a lot of people waking up this morning feeling like they've just been sucker punched. And, I get that. But I've been warning for a long time through this entire process that this whippy market, that the reaction to this whippy market will not resolve quickly. And when we're hypersensitive like this, any news event, anything can really create some damage. And this is why I continuously say, there's our edge in this market as swing traders continues to be challenged. It's very difficult to make money. You may have said everything that was working last year is no longer working all of a sudden. And it's not because of your system. It's not because of anything other than the market has changed character here for a while. So be real careful thinking that you can just trade at the same level or at the same intensity that we did back here. Okay? And this is those times in the market where people's accounts just get chopped to pieces, wanting to trade, being impatient, waiting for better times to come back, and your account just gets punished as a result. And it's unfortunate. Now, I hate when we get reversals like that overnight. I just hate it. Currently, as I look at the Dow futures, we're only gapping down about 245 points. It could have been worse. We were looking last night at futures down 285 plus almost 400 points at one point. So it could have been a lot worse, but still this is substantial. Now, here's the important thing I think to notice here, and I'm going to jump to the SPY. Because on the SPY, we were challenging that 50-day moving average, and it was encouraging that we held up there. Well, now, this morning, we're going to gap down somewhere into this area. Okay? It's going to be really critical how the market responds here after the open. If the bulls step in and we can hold on, this could end up being an event where we just confirm that we have some bullish price action in here and we hold, a higher level. That would be wonderful. If, however, those bears step up, and we've seen this recently where, boy, they just get really tenacious, and when they start to push, The bulls just give up real easy and we sink. Now, with a failure of the 50-day moving average, please keep in mind this is a second failure here in 2 weeks. So we failed it here after recovering, and this could be a failure here. Now that failure here, if the bears do get a hold of this, it's going to be extremely important that we hold Friday's low. Okay? Because if we drop below Friday's low, if that selling comes in strong and we drop below Friday's low, then we can easily expect a retest of the 200-day moving average. And I don't think anybody wants to see that, but the possibility does exist. Also keep in mind that this is now, if we maintain this, don't rally back above here today, then this would constitute another lower high in the market. Not a good sign. So as long as it holds this higher low, we'll be okay. But that lower high could be significant if those bears step in. So be really watchful of that. Now, I'm not going to suggest that we're just going to fall off a cliff by any means. We have a nice wedge pattern here that could definitely hold us, continue to hold us in this range and continue to give us this volatile price action in here. As we wait for a break either up or down. So watch that carefully and, just plan your trades very carefully if you are going to trade. Now, we've recovered a lot so far since I sat down this morning. We've already recovered 80 points in the market, trying to show a little bit of bullishness, in the pre-market here, pushing back higher, but it's still a significant gap down, and it could be very painful for those who got trapped in yesterday. We could see, unfortunately, they buy yesterday, everything was looking good. This morning they get stopped out as the market reacts lower. So watch it carefully. Make sure those bears aren't taking a hold of this and the possibility of a really hard sink. So watch for very fast price action today. We're going to be emotional probably, at least the first part of the morning, very emotional as we swing around this information. Also keep in mind, we have a lot of news on the economic calendar today. We have the ADP report coming out. We have international trade here at 8:30, productivity and costs coming out, the petroleum status report, and the beige book this afternoon as we head in toward, remember, it's not next week, but the week following, we are going to be going into the FOMC. Friday is a real important day. Friday is going to be one of those key reports that kind of give us a clue whether or not we're going to be, where the FOMC might be sensitive to an interest rate rise. If we start seeing that number come in hot and average wages continuing to rise, that could be a clue of additional interest rate rises, and the market might be hypersensitive to that. So kind of be careful. Also, today, at 2 o'clock, that beige book, if it shows something in the way of, the market overheating, or the economy overheating, I should say, and inflationary pressures showing up there, that could also affect our market today. We have about 150 companies reporting earnings today. And on the good news side of things, those earnings have been coming in relatively positive, and most companies are projecting good quality earnings, going forward. So that's a positive sign. If we can get rid of some of this interest rate fear and shake up that's happening, we may eventually get back to a better trading market. We'll see. So be watchful, be careful today, and pay attention to the clues. Try not to be biased. Just pay attention to the price action clues. And there's no way you can look at this chart and not see the potential for bearishness. There's also no way that you can look at this chart and not see the potential for bullishness. But in that kind of whip, we have very little edge, so you have to be a little bit careful and plan your trades very carefully if you do decide to trade. Let's take a look at the VIX. The VIX this morning is likely going to pop up, and unfortunately, we've held this support level, price support level. We held the 50-day moving average, and now a pop-up this morning could essentially mean a higher low in the VIX, which could really start a bad trend for us in the market. So kind of keep an eye on that. If those bears really come in, we could see the VIX really spike here. Unfortunately, that's just the way it is. Now, T2122. T2122, if you remember yesterday, I mentioned how we were reaching up here in T2122, up in this area where we could be seeing that bearish reversal come into play because we moved so quickly in one day. Well, that certainly held true at the close of yesterday. Now with this gap down, we're likely to see this move sharply lower today. And who knows what the actual reaction will be after the market opens. But that bearish reversal up here was certainly giving us a clue that we were just in the short term a little bit carried away here to the upside. So no big worries there, but something to be concerned of. Well, with that, guys, I want to wish you all a very good day. And I know it's an unfortunate day. No one wants to see a market whip around like this, and it becomes very, very challenging. I understand that. Be really careful, guys. Protect your capital. Remember, better days will come. Overall, if you look over history, the market just wants to go up. And all we have to do when we hit these really tough patches like this is be a little bit patient. Wait for better trading to resume, because it will. And things may, and then your trading, the odds of your trading improve as well. So everyone take care. I want to wish you all a very profitable day. If this is the first time you've seen this information, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons. I really do appreciate that. And feel free to drop a comment. You guys have been very kind. I really do appreciate it. Also, please feel free to share this video with any friends, family, whoever you might feel could benefit from this preparation video. Everyone take care. We'll talk to you all bright and early tomorrow morning.